All right, good evening, team. Instead of watch list, I got my mic up and running. What I wanted to do is kind of go over some educational videos, recap. Not today. Today wasn't that great day of trading. If you're looking for some big moves, scalping, it was brilliant. We had a lot of ranging market today, so it was really nice if you set your targets to 30, 40 ticks and just waited for market structure to form. Unless you know how to do that, then you really don't know how to trade some of those markets. So what I'm going to do here is pull up the NQ and go over market structure and then how I trade futures specifically with NQ. A big fan of this particular ticker, as I've been trading this for a while. So just kind of want to go in, kind of start with London session. I want to say I took 7 to 8 trades on the London session, and show you just how many opportunities there are, just swinging. I mean, you see where even in the London session, where there's not a ton of volatility or prior to, you get some really nice moves if you catch it in the right direction. So I want to share with you how what I do to look for market setups. Now, when you first start doing this, I would recommend scaling to a little bit of a higher time frame. If you're going to be scalping, throw it on a 5 minute, and then look for setups. Then drop down to what I would use the 1 minute. Big fan of the one, but you'll see a lot of good traders. They have a couple time frames that they will look at, and they will scale from an hour down to 15 down to a 1 minute to find that precise setup, and that's good practice. Now I think as you get used to it, you'll be able to tell, like, all right, I know that this is 1 5 minute candle pushing up, and I can see the imbalance in here. So kind of what I want to show you is basically how to set up your chart, what I'm looking for market structure, and then we'll tie it into futures trading, and then really maximizing your leverage using uh, multiple accounts. And I'll get into that towards the end of the video, but I'll keep this one short, down to maybe 15-minute video, as we scroll through uh, the NQ. So give me a second. I'm gonna pause it here, and then I'm just gonna set up kind of what I'm looking for. So if it's right before 3 o'clock, show you how markets kind of developed with some of the whipsaw consolidation and then the whipsaw area. So as we're as we're looking through these areas, I'll identify them by the name, and then kind of show you what I'm looking at as far as the appropriate entry, some indicators on why I'm taking this entry, and then the targets. Right. So if you can maximize your abilities to see the accumulation, manipulation, and distribution of the market structure, and what each of those look like on a smaller time frame, pinpointing that entry is key to be consistently profitable. All right. So a couple things I'm looking at. You could see some of the fair value gap earlier in the market on the NQ, and this is one going into 2 June. So Friday, which is a great trading day. A couple things I like to look at is how market structure consolidates and how it breaks out. So as I'm as I'm looking at previous price action to give me a good analysis of where I would project the market to basically turn and I could take profit into it. Um, I'm really watching how market really consolidated overnight on the first into the second, before we came up. We've been wicking into this level a few times, and then we finally break through, come back to retest, and have a nice drop through. So anytime you get a large or quick imbalanced move to one side, you're always going to see a nice reaction to pull back. So there is a lot of opportunity to find trades in between. particularly as we balance off this fair value gap. There are a lot of times where, hey, we have um, you have a continuation and structure. So we still have this bullish market structure forming, and then we have nice consolidated range where we break out, come lower to fill the imbalance that we created before, uh, bouncing and running higher. So again, moving right back up into accumulation to manipulation. My expectation is that we are going to see a market structure shift below here, and that'll give us an indication of a potential short entry. Again, you never really want to be the first one to jump in on shorts. So I'm not like immediately taking shorts off this. I want to see how this level here, this accumulation, sorry, this manipulation phase here uh, unfolds. So there are a lot of possibilities where this can find some buyers on the London market as volatility starts to increase, and we could see a nice pop higher. Or do we see the rejection and then a continuation through the distribution part of the market structure? So I'll play it out here. So again, wicking right back in through the area. Um, keep moving forward. And I'm really looking for this candle here. So as you can see, we had a nice move down. I would expect a little bit of a snapback, and as long as we stay uh, below this manipulation phase, we should see price move back up into probably this area. I don't want to take it here, but we want to see a little bit of a confirmation. So we always talk about confirmation in the Discord, uh, but this here is, zoom out a little bit. Uh, this here is the confirmation of this setup. So if we pull back close to in this area and then drop, I would expect the this supply level to kind of come back and get filled. So I would look at a short position and then just keep a stop. And this is 20 ticks, and we can target, and we'll look to target initially this uh, this previous fair value gap. It kind of ties in with some other market moves, but gives us 66 ticks. And if you don't want to trade that much, keep it at 50. We'll still keep a healthy risk reward here. So as we play through, see a nice rejection off that level. Again, you don't want to get caught up in this move. You want to see how it reacts as it comes right back in to our level here. So as it comes really ripping right through back into our zone, I want to see it hold the manipulation phase of this. So if it holds here, I can anticipate us moving just a little lower and back into some imbalance on some higher, just this, like a 3-minute time frame, you could see a little bit of imbalance at this level. So I would take a short position here um, and keeping a tight stop. So I know if I do get stopped out, I'm only out 20 ticks, and I can start taking profit if we do push back down. All right, so so we hit that level. Now as you start to look forward, we know this trade's good. Start looking for more setups. I'll just keep fast forwarding through here. All right, so here we have a little bit of consolidation. What I want to see is you can see these wicks here. This is good for liquidity, right? So you almost keep your eye on the liquidity and then how price acts around those areas. Because you don't want to buy or sell in between. You could sell potentially back up into this zone if we could see any sort of consolidation. If so, we're getting in here, we see some nice rejection candles, some pullback, and we see a nice drop. So I mean, potential for a little breakout trade here. Not looking for much in the London market, but what it's doing is showing us that it's uh, peeling back down, pulling liquidity on the sell side. All right, so that's telling me is, we're still in a bullish trend, broken structures on the smaller time frame, but on a higher time frame, we're still moving up. So we'll keep pushing up. We see a nice drop here, um, that pulls liquidity from previous runs from this consolidated move up. So now we see a nice push higher, um, and this push higher, what it does, it looks like it's forming a little bit of a fair value gap. So the imbalance. So these on this big push up. So like on a 3 5 minute uh, candle, this is a good area that I'd be watching for a pullback. Um, so if you're looking to go long, you could take your position here, just target higher. There's some wicks prior to that you can target maybe a little bit through this level to see if price pulls back into the fair value gap, this imbalance that's created, and then keeping a stop just under the lows here. Because if it breaks below with any sort of force, we don't want to be caught in the downside move, as we see in Q. When it moves pretty drastically. So you can see how we pull back right into the imbalance, which is exactly what we want to see. Even if we were to enter off of this kind of like small buyer's hold level, that'd be a better entry where we increase our ratio from 1.5 to almost 3.5. So be a good trade to get a setup. And these are where you would put limit orders. So you would just set a limit order at these levels, let price come into it, take it instead of reacting off the market. I'd rather get in down here than reacting and getting in up here and watching price pretend like it's going to drop and then I get out because I got my psychology. That's too much of a imbalance between my risk and reward. So sometimes it's better just to trust your trading strategy, trust that this method works greater than 50% of the time. And with a risk reward like this, you're okay. You're okay to afford a couple losses as you progress through this trade. Um, so this one ends up working out pretty well, and then also gives us a pretty decent imbalance. So I'm kind of watching price on how it pulls back uh, into this area and see what it does. So, and let's fast forward into this level. So you can see we've pulled right back into it um, with a nice uh, push back out of the zone. So we've kind of broken through this seller's hold area, and then with good displacement too, right? So as long as we push and we like this initial wick is, when you're on this 1 minute, it looks a little intimidating as it's starting to sell off. Then we immediately snap back through, pull back into the zone, and then it looks like we are starting to consolidate. Um, so you could potentially look for like a long position here and keep your stop just below the imbalance, and then just target like a 1 to 2, or look back in time and see if you could find a better risk reward. But 27 ticks to 54 ticks, again, I know that just statistically, if I hit this trade uh, more 50% or more of the time, I'm better. I'll be in profit. So I don't have to worry about it as much. Starting to break out. As long as we kind of hold this level, maybe, yeah. So as long as we hold these levels, I'm okay in this trade. Even a nice little dip down, it's fine. Um, and then it starts going in our favor. So not a bad trade there. You can see we've shifted. Uh, you call this an order block. So keep painting this stuff on your charts because it's going to play I guarantee it always does this in the future, is it always reacts whether it's an entry or a target for us in the future. All right, so keep fast forwarding it through, end up hitting profit there, and then really pushing higher. Guess if you wanted to trail this, you could have done so and really taken a nice move higher. Yeah, anytime you're taking 130 ticks in the pre-market, yeah, you're doing pretty good. So eventually, what I'm going to do is hop on the London market if I get enough of you guys to do it with me, and we can start taking some of these trades. And I'll show you how to set up your accounts. So I'll obviously get a nice push up, almost 200 ticks um, within a period of, what is that, 43 half hour. So all right, so so here's another thing I'm looking at is as we start to pull back out of this, I'm not taking this initial short. I want to look for some confirmation. So I want to see a pretty drastic pullback back into here and see if we react. If we come up this way and we pull back into the zone, we're going to do two things. We're either going to make a new high, or we're going to fail to make a new high. Now, when we fail to make that new high, that should create an imbalance sweep through this imbalance here, and then potentially see a little bit of consolidation, wicks lower, before we pull back up into this zone. So if we can get an imbalance somewhere in here, I'd be looking to take a short position, keeping, depending on how this all forms out, but taking that out and either targeting the the imbalance that was created off that move up, or potentially taking it back down into this order block here. So an order block is really just they always say it's the one you could play at one candle. It's your first red candle or your last red candle before a drastic run up and a continuation. So this could be your order block, and we could target something like that. All right, so delete that. So again, so we're getting a nice push back. We really want to see kind of market structure shift. It's a pretty deep pullback into this level, and next thing we want to see is do we reach higher or do we fail and start to move lower? All right, so failed to make the move lower. Sorry, failed to make the move higher, and we're starting to get a little bit of a bullish shift, at least on the internal the markets here. So get a market structure shift. So now as I get this shift in structure and a nice move through that level, so displacement is key. How we push through that level tells us everything. So if we want, we could take a pretty much anywhere in this zone is where we want to go short. If you want to pinpoint your entry, you may miss a few trades, but you're really reducing your risk. Again, we can come right back into this. We have a 1 to 2.5 risk reward, and we're just weighting it. So if I want to, sorry, that's almost a 1 to 5 off the this last green candle before we have a displacement lower. So a 1 to 4, putting the market limit order to sell and waiting for price to come our way. Now, if price were to bust through higher, then this obviously this trade is invalidated. If we were to take out any one of these low points, then it would invalidate this trade as well. All right. All we did was clean the imbalance up here. So not really watching that. Yep. So we're coming right back into this trade. And so I would have been filled pretty initially there and just got pulled in until we fill lower. So like price will have to do one of two things. It will have to um, sweep liquidity high on this side here. So to either have to sweep here, or sweep the low side before it runs up. So just think about it. If price has already swept high, it will likely, as game probabilities, it will likely want to sweep this order block down here before a continuation move higher. So consolidation is starting to get that push back down, and you can start trailing stop loss, and you can see we are basically took out this order block. Now, so if you were trading, you had a couple contracts, this would be your first target. But realistically, we'll keep this one on here. Now, on a nice push out of the zone, what I would look at is, do we create a new low, or do we fail to create that new low? And if we fail to create the new low, just like we saw over here, so we get the nice push down. Here's your lower high. Do we push through with imbalance? If so, then we keep holding down at this target profit level. But if we come down and we only push, uh, you know, we fail to make this new low, even if it wicks and then closes higher, it's a good indication that price is going to want to come back up and retest these highs. And if that's the case, as you're looking through this, you're still in this trade. You haven't gotten out yet. You're waiting for this. Obviously, price is going to just drop straight. It's going to zigzag its way down. If it comes back down at this level, you have a fair value gap that will likely get filled, right? So if it fills this fair value gap and then it doesn't break, it doesn't completely push through it, then that's an opportunity to look to get out of this trade. So, all right, it's doing just that. Coming back, and we filled, but it was kind of a weak fill. So this would be a potential long setup as we start to push higher. So if you're, I would close this trade, and I would look to open a long position, um, especially as we start to break higher. To me, I'm okay being a little bit of aggressive here because I would just take it stop at 23 ticks, targeting the recent highs. Um, and we can realistically probably sweep through this depending on how we react in this area. We can sweep, take some profit, and then if you feel like holding, we'll likely sweep these highs here. So that would be a position I would hold. I would exit the short and look to enter a long position. We'll get a good market structure shift back into the bullish area. So we get another one of these. Um, you just tie it right there. Anytime you get break structure, chotch, you'll start to see price kind of reverse back in your favor. So here, zoom out a little bit. All right, price definitely moving higher. Probably should have slowed it down a little bit because you would have seen. It's like if you're in the middle of this trade and you've seen this wick, expect it to put in a low. Now we do have an order block sitting here, so if we were to fall through, you could have taken half your profit here, held, kept your stop right above break even, with potential that we sweep higher. So you're risking a little bit. You're risking 60 ticks, and maybe that's okay because you want to potentially make 40 ticks. Do that's where your risk management comes into play. So if you have a couple contracts, take half, take 75% off here, and just let one or two contracts go to potentially sweep higher. All right. What I'll do now, I'm gonna pause it and I'm gonna get us set up for another entry I like to see, and then kind of like the timeline. So pause, and we'll come back. All right, it's probably my last example I'm gonna show you on this market structure shift, and just showing how imbalances get filled. So just one strategy for this one. So I typically, or haven't recently been playing the open. I do like to mark it, so I got the automatic indicator here that marks the 9:30 open. What I really want to do is find a setup at 10 o'clock, right? So what we'll do, you see all this imbalance getting filled. We see, or if this one gets filled. All right, now it does get filled. You can see all the imbalances end up getting filled. It's just really a matter of patience and entry. So fast forward this one into the 10 o'clock. So now we have the 10 o'clock time frame, and we want to see how the market reacts kind of in this area, right? So as we start to fast forward, see market, pumped up, swept these highs up here. I think it's the high of the London session, and what we want to do is sweep the low of the London session, which we end up doing. So I would anticipate price either retracing nicely, slowly throughout the day, back higher before it fills this imbalance that it created as it dropped through, or continuation to fill previous sell side liquidity. So I'll keep an eye on it. So get a nice initial pump up. Again, it's all about patience here. Again, get a nice pump up here. Um, and what I'm watching is we're holding, in the market, we're holding this level, right? So as we're holding this level, I want to see what price does, and then measure this out. So it's a bigger area that I like to trade in. But what it will do is if we can hold these levels without displacing through them, it'll give us a better setup as time goes by in this 10 o'clock hour of trading. So pulls right back in, and we're seeing price kind of hold between. Let's see here. Price holding in between here, so starting to range in between these two levels. Um, the one thing to pay note of is when you start to go back through and back test your strategy, keep an eye on market structure change and breaks of structure, and think about why these things happen. So we have a massive drop off at the tail end of the open. We're still in the AM trading session, and then all of a sudden we're starting to shift higher. We have a little bit of balance area, a little balance that's set up here, and then we break low, right? And we hold this level again. So again, sellers are not able to push this lower. Um, I'd be key in this area. What I want to see is basically price come do this, right? I want to see this thing drop through, and as it drops through, I want to see this. I want to see it pump up. Now, if I can get that pump higher, that gives me a good imbalance to find an entry for a long, right? So if we do that, we find the entry to long, we could potentially, let's see here, uh, look to fill probably this. So you always got to have a target and an entry, right? So we know we have a little bit of an imbalance that's up here that's likely going to get filled. So we know, all right, if I were to take on a trade, how do I keep my risk somewhat low? I'd like to keep mine somewhere around in the 50, really no more than 50 ticks. That's just the, the the means of my risk management, my tolerance to lose that. Now this is 380 ticks. I mean that's pretty phenomenal. Again, just looking for some displacement out of here. So get a nice push up. See what the next candle looks like. Good. All right. So for me, this is enough displacement out of this zone to find a target. I would say if you want to target half or just the entry, and then keep your stop below the fair value gap. You can keep a 50 tick stop and you're looking to pull 300 ticks off the board. So I would put a limit market order to buy here at 511.50 and just let it sit. I'm okay with buying 1, 2 contracts of the E-mini or switching to the micro E-minis and then getting 5 or 6 and letting that, I can risk that. So I again, we're still waiting for this trade to develop and give us the confirmation, which would be price to uh, shoot up, create the imbalance, see what happens in this range, and then pull back into this level. If it continues to push up, we'll just look for another imbalance to form if it shows any strength that high above this balance zone. But anytime you get a balance zone, you want to see a breakout lower, sweeps the liquidity down here, which is a good indication that we didn't pump through, so it didn't fill any more of the sell orders. It bounced off this level and continued higher, created the imbalance, and give us an entry. So we get entered into the trade, pretty close to getting stopped out. I want to say, oops, this gives us not a lot of wiggle room. I think it's 15 ticks off from hit or stop. And then we continue higher. So now when you look to trade, we know, we've talked about this before, we know that these levels are likely going to get either taken out or slow that momentum, right? So we see a little bit of slow momentum, get a little pullback. Um, for me, I'm okay taking some profit depending on how this reacts, as now we have a nice push up, pulls back to fill some of the imbalance, and we continue higher. So again, keeping the strategy simple. You're basically looking for 3 things. You're looking for a market. You basically look for a balance, right? This is a perfect setup. So first thing you look at, you find a balance zone. Where we at in this market as far as where you think liquidity would rest. Well, if everyone's thinking this thing's gonna go higher, well, you're entering your position a you're entering a long position. Say you get a bounce and you take the bounce off this trade, and then you just put your stop off at the low, right? Price will typically, come back, sweep the previous low, and then run higher. And many times, if you were to take a trade like this and just want to hold it, instead of taking this bounce, like, oh, I like this bounce, I'm gonna put my stop here at the lows, and I'm gonna target the highs again, and you end up getting tripped out by 5 ticks and just to watch it run up. Um, you'll notice that there's a lot of manipulation in this market. So instead of entering here on this time frame, have a little patience, wait it out, and see what the market gives you. Because you're looking, even if you were to look at getting filled here, there's a lot of liquidity down here still. This isn't as good of an entry as this gave me an entry, because I know I swept low and then created the imbalance. So you want to look for market structure shift, a little bit of a balance. We get a breakout to sweep the liquidity. On this example, it's the sell side liquidity. That sweep then shows me rejection that creates the imbalance. We pull back to the imbalance and we take the trade. This happens, of this setup 8 out of 10 times. It might continue. Just sometimes it continues to just push, kind of like in this case here. There was not a lot of uh, there wasn't many good opportunities to enter on this trade. Even if you were to take, there's really nothing here. So yes, you have 50-50 gamble on this trade and 50-50 gamble on this trade, where these setups here, again, write this down. We want to see a market structure shift, whether that's to the bearish or bullish side. We want to mark out any key balance areas that we have, and then a sharp move out of it, because that sharp move out of it is likely going to target the sell side or the buy side liquidity. we've already shown you price likes to sweep the sell side liquidity and the buy side liquidity. So your buy side liquidity is up here. We swept through it, and then we kept going down. A lot of traders will get in on this bounce and this break lower, and they get in here, and then price turns back around on them within a few minutes, and then continues down to your target. So if you were just to wait for those rules and just almost trade like a robot, um, you're you're going to get better entries. You're going to get stopped out fewer times, and the psychology of your trading and your risk management are all going to get in line with this strategy, and you'll see far more trades going in your favor without wicking you out before running higher. All right. Hope everyone took something from this little recap. I am going to pull up Meta and kind of go over what I was watching and before we shut it down. So if you guys took this trade or didn't take this trade, feel free to cut the video, and I'll try to post something tomorrow. Something maybe along the lines of uh, the like copy trading and futures account setups. Get into that. But if you have any other requests, feel free to just post them in the comment or join the Discord and DM me personally. All right. So Meta was a call I wanted to trade today. So we've seen a lot of bullish momentum. We knew we had some buy side liquidity up above 275 that we wanted to target. For those who are still holding, yeah, feel free to continue holding. I think we'll continue to see some bullish continuation uh, throughout the week. But really, the way we're looking at it is we know we have basically two areas that we're watching. All right. And the reason we called this trade out, we knew we had a fair value gap here on a 1 minute time frame, and the call out was to trade this thing if we were to see basically this and then a breakout lower to sweep through the recent lows and to tap into the imbalance that we formed on this bullish run up to target 275, which would be the sell side liquidity, and then anticipating either a pullback and a run up or a nice slow steady decline to fill the imbalances that we left uh, that that this would leave behind. So all right, so we'll go ahead and fast forward through the day. You can see that we opened up, put in our lower time frame. You see that we opened lower, and we swept through the balance zone that we're filling. It's kind of what we anticipated from the Sunday night watch list that I posted, and then the call out on this trade, the specific entry, expiration date, and the strike price. The contracts that we got here went up over $100 contract. Um, so let's see here. So you usually have a lot of volatility in the morning, pulled right back down into our fair value gap, which we've been waiting on since last week. Pulls back into it, take the trade, take the long, and then target the high side liquidity. So again, we have market structure shift back here. So this nice run up is market structure shift. We've cleaned out some of the liquidity on this side. What we really want to do is see this liquidity get tapped into before we take this position long. So if you were to take this thing long, you can maximize your risk reward tolerance here as you're looking at almost a 1-to-6 trade. And I want to say most of the guys who took this trade uh, were able to see that breakout. So again, this market structure strategy, it works on most of your equities and most of your futures. You can tie it in with your options and see quite a bit of success. Again, you're not going to win every trade using this strategy, but as long as you keep your risk reward tight, 1-to-6 is pretty good. For me personally, if it's less than a 1-to-2, I'm probably not taking it. But something like this, it's we have market structure shift, we have a big balance zone, we see a breakout low to sweep the liquidity and or come back into the imbalance zone that we created from Thursday. You see a nice push out of this zone. We would have a tight stop loss on this thing, and this trade just went in our favor today. So I'll look to find maybe one more of these trades this week after tomorrow and Wednesday setup, as we'll see likely a pretty volatile Thursday. All right. If you guys have any questions, feel free to hit me up. Send a comment, join the group. I'd love to have you and kind of grow together as we start to expand into futures trading, scalping, and option swings for the week. All right. Until next time.